Welcome traders, welcome to this short presentation. In this presentation I am trying to break down a comment made by James Dalton on Twitter. This was shared with me by one of my Telegram group members, and he wanted to know what exactly Jim Dalton means by that comment. So I'll be trying to break down that comment and try to help you understand what exactly he means by that comment. I am Dean and I'll be doing this short presentation for you today. But before that, let me go through the disclaimer real quick. Derivative trading involves substantial risk of loss and it may not be suitable for everyone. Past performance is not indicative of future results. Information shared in this presentation is for educational purposes only and does not constitute a trading advice in any way. A short personal disclaimer. This is an attempt to understand what Jim has said in his tweet. I, like many others, have learned from him a lot, and any mistakes in my analysis are attributed to my limited understanding only. I may not be able to completely decipher what he is trying to say, but this is just an attempt. Alright, I do not trade in any other instruments than Indian indices like Nifty and Bank Nifty. So Jim mostly trades E-mini, S&P and US instruments, which I do not trade. And once again, this is not a trading recommendation in any way. Okay, let's look at what the comment exactly was. Jim says, overnight inventory is short. The expectation is for a counter auction. I beg your pardon. Failure to see would be an additional sign of weakness. Weekly options expiration. Any weakness could force naked put writers to add to the downward pressure. I am neutral coming into the opening. Okay, let me break down this comment for you. He says overnight inventory is short. The expectation is for a counter auction. Then the second statement is failure to see, that is the counter auction, would be an additional sign of weakness. Then he goes on to say that today, that is on Friday, that was yesterday actually, weekly options expiration. Any weakness could force naked put writers to add to the downward pressure. And lastly, he is clearing his position, and that is I am neutral coming into the opening. So as in as of the opening, he does not really have an opinion or a bias on the market. So this is all these statements that we are going to analyze individually. Okay, so now I'll start with my analysis. Again, please understand, this is just an attempt to understand what this great trader is trying to say. Okay, the first statement, overnight inventory is short. The expectation is for a counter action. Once again, counter auction. Okay, what he means by this is that yesterday's overnight auction has actually developed below or mostly below what yesterday's regular session close was. Okay, so there are two sessions in the US. These traders usually distinguish between these two sessions, and this is based on the amount of activity that happens during the regular sessions. All the active investors are trading heavily. The volumes are very high, but then once the regular session closes down, in the overnight session the volumes are not that much. That's the electronic session as they call it. And also, all the smart traders or the traders who really have that ability to move the markets, they are trading in the regular session. In the overnight session, mostly traders with limited capital and limited understanding are basically active. So what happens is, if as compared to the regular sessions close, all the development or the profile that develops in the overnight session, if it is below that, let me draw it for you. So let's say this is the regular session and it closed here, and then the overnight session mostly develops below the close. Okay, this is the settle or the close as he calls it. So what happens is the smart money will come in and they will see that all these traders, they are short, and as compared to yesterday's close. So what the smart money does is they come in and they immediately mark the prices higher during the open or the opening session. And this higher price action puts all these weak traders under pressure. They feel that the market is running away from them, and they usually keep their stop losses above the overnight session high or something like that. And once the smart money takes out all those stop losses, all these weak holders are out of the markets, they can then start to mark the prices down again and begin the original trend. So this particular action is what James is referring to when he says counter auction, right? So I would call it an inventory adjustment rally, because the inventory is short in the overnight session. Smart money would come in and they would try to rebalance the inventory, because what will happen is, if they start marking the price down and the weakness is really not there, these weak sellers will start booking profits and start creating demand, and that would prevent the markets from going down and giving smart traders a good amount of profit. All right, let's move on to the next statement in his tweet. Failure to see the counter action or counter auction would be an additional sign of weakness. Now what he is suggesting here is that let's say the inventory is short, overnight inventory is short. If this was the close, the overnight inventory mostly has developed below that close, and these are by definition some of the weak traders in the overnight session. So what he says is, if these traders are not flushed out, and if the smart money feels that the prices need to go even lower, then it is a scenario where the auction is particularly weak. All right, so smart money are not bothered about these traders. They just want to mark the prices down. Now there are a few scenarios when this kind of situation occurs. One, if the trend is really strong and any attempt to flush them out will only result in additional selling coming in. So smart money does not want to pile up on a long inventory when the market is actually in a downtrend. So they would not bother about that. And secondly, if they have accumulated all their short positions here, so they don't want to flush them out. They can, if the trend is particularly weak and they already have their positions, they can just go on marking the price down because they want to create that differential and book some profits. All right. So these are the two scenarios when we may not see the counter action, and that would be an additional sign of weakness, as Jim puts it. Okay, move on. Yeah, weekly options expiration. Any weakness could force naked put writers to add to the downward pressure. Naked put writers means those traders who are selling naked puts without any hedges, expecting the prices to remain above their strike price. So if this was the regular session and this was your overnight session, naked put writers may start selling puts somewhere here. So if the price stays above this, all these puts at this particular strike will expire worthless. They will become zero, and whatever premium was they were sold at, put writers will pocket that premium. But if the market starts trading below this reference and starts moving lower, these put writers, they are in trouble, because their positions, the put will start appreciating very quickly, since it's an expiry. So the premium, once they become in the money, the delta will go to 1. So for every point move in the market, the put will also appreciate by almost a point, and that is a dangerous situation for naked put writers. And that is what he is pointing to here. what he's saying is that if these put writers, they cannot keep the prices up, and if they also join in the short side of the market when they have to cover their short puts, then this will create additional downward pressure. And since it's an expiration, these traders will have to do one of the two things: either sell their short positions, short put options, which is actually a bullish bias. Sorry for the spelling mistake here. So short puts means that the traders have a bullish bias, and if the market goes down, they'll have to throw in their short puts or try to hedge them. But in both cases, short trades will be created in the market, and that will add to the downward pressure. Now, since we are, we have this Bank Nifty weekly expiry, we are familiar with this particular mechanism, and we have seen, big moves on expiry days when one side of the option sellers get trapped, So we are aware of that. We have seen this thing happen, a ton of times in our markets. All right. So yes. Here this basically is the whole tweet, and then the last statement is, he says that he is neutral coming into the markets. Now that is based on what the surrounding market action, the recent market action has been. Now I do not track those instruments, so I don't know that, but what may have prompted him to take such a view is that he may feel that none of the participants, neither the buyers nor the sellers, have a decided advantage or clear bias. So he feels that it's better to go in flat into the market and then see how the market develops and then take a call than committing and getting ahead of the markets, which I also strictly advise against. Now this comes so naturally to him. We all have learned it from him only, so it's so natural for him to put it down in just a few few sentences, but it takes us almost 10-12 minutes to figure out what he's actually trying to say. All right, so that was my attempt. I thank you for listening to it. I have tried my best to analyze what he is trying to say, what Jim is trying to say, but please bear in mind that Jim's trading experience, I'm just talking about his trading experience, is a few years greater than my total age at this moment. So guys, please understand that he is one of the greats of this particular industry, of this field, and I'm just trying to make an attempt to understand what he is saying. Okay, and I'm just sharing my attempt with you. Please do not consider this as my comments on his analysis. I am not that a big trader to do that, but it's just an attempt to understand what he's trying to say, and I'm just sharing my attempt with you. So I hope you liked this particular video, and if you like this video, then don't forget to give us a thumbs up, subscribe to my channel, and you can one of my Telegram members has asked me this question. If you have any questions, then please go ahead and put them in the comments. I would be happy to answer them, and do join my Telegram group. I am adding a link below this video, and I would see you inside my Telegram group. So thank you for listening. Have a great day.